What if you'd bought HAL in 2020 या Muscat Dock in 2022? This sector may be similar potential है and it served me well so far. A study recently projected कि India की water supply will only be able to meet half the demand by 2030. In fact, many of our urban centers are already facing crippling water crises, and ये यहाँ से बुरा ही होगा unless we can do something drastic about it. And that is where 4 companies become big winners. But in order to understand why these companies are worth investing in, we first have to understand कि इंडिया की water demand आती कहाँ से? Most of the water in the country is used in irrigation, which accounts for about 78% of the total water used. The second largest consumers are industries or commercial complexes, which currently account for about 12% but accounted for only 5% just 10 years back. And this sharp increase is very important to us because any stocks that serve this sector stand to gain the most over the next few years. Finally, domestic consumption is the third largest consumer and they currently account for about 6%. A study estimates that per capita, we consume about 135 liters of water per day, or 200 billion liters of water per day for the entire country. Now, this is also expected to grow by about 32% over the next 5 years. And that is where our first stock becomes very important. It's called Vatik Vibhag and is one of India's largest players. They create turnkey projects mainly for the government and large industries with a specialization in desalination and industrial wastewater treatment. अब desalination में हम sea water को consumable salt-free water में convert करते हैं, but historically this has been way too expensive. Now though, reverse osmosis, which is a process used in water treatment, has become financially viable and is being used in a plant in Chennai. इसके लिए Vatik Vibhag को 4400 crores का एक DBO order मिला है, where DBO is design, build and operate. And it's very beneficial for the company because it creates a recurring annual income. Once completed, this project will be the largest desalination plant in all of Southeast Asia with a capacity of 400 million liters per day. That is enough water to take care of the entire Chennai urban area alone. And if this project succeeds, we can expect more to come up around other urban centers because seawater is essentially an unlimited supply of water. We would expect that Vatik Vibhag would get an early mover's advantage and should be able to source many other billion-dollar projects. Apart from that, Vatik Vibhag also has a significant international exposure in Bangladesh, Senegal and Romania, and they mostly work on an EPC model, where EPC stands for Engineering, Procurement and Construction, just make it works like a standard construction company. It builds a project, but most of the cost, including raw material, is borne by the government or the industry that passed the order in the first place. This means that the company doesn't have to invest its own funds and can stay asset light. This in turn allows the company to take on many more projects than its peers can. This stock was also one of ace investor Rakesh Jhunjhunwala's favorites, and it's easy to see why. It has historically been profitable, and with the demand expected in this sector, I would have no qualms investing in it. The stock has already tripled over the last 12 months, but I think that's only the beginning. Moving on to our second stock, it's called Ion Exchange, and it was part of the Ion Exchange London group, but is now wholly owned by Indian promoters. It is the largest water solutions provider in Asia and has over 100,000 installations worldwide. They work in a similar space as Vatik Vibhag, but have one distinct competitive advantage. They can work for smaller players, and by smaller players I mean the likes of 5-star hotels, defense establishments and other high-margin businesses. Remember the sudden increase in water consumption that we saw from the commercial sector some time back, the 5% to 12% increase? That is where Ion Exchange benefits the most. For example, within hospitality, their clients include the likes of Leela, Taj, Oberoi and Hyatt. And this sector is expected to grow at about 14% per year over the next few years. So this is a market that is yet untapped and yet to realize its full potential. Not only that, Ion Exchange also provides chemical treatment programs for water applications. These treatments are usually much cheaper and much faster than regular desalination projects, which means that they can be used by smaller players, which again is a market that is yet to show its true size. Ion Exchange has also been historically profitable. As you very well know, I try not to invest in companies that are not profitable, and the stock has given about a 50x return since its listing. It has also tripled over the last 2 years, but again, I believe there is still plenty of room to grow. And our last stock is EMS, which is a pure play on government schemes like Amrut and National Mission for Clean Ganga. They almost wholly rely on wastewater treatment projects and have completed many across northern and central India. They have also worked with the military engineering services and Ircon International within railways, making this a picture-perfect play for India's growth story. As is customary, they're also historically profitable and have more reserves than debt, providing them with one of the soundest balance sheets in all of infrastructure stocks. As a recently listed company, their true price has not yet been discovered, but I do think that they can give us similar returns as Ion Exchange, which opens up a room for about a 25x gain from here. Check this video if you want to know about the most undervalued infrastructure stocks in the country. I'll see you next time.